content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. John Mintz does not provide tax or legal advice. All decisions regarding the tax or legal implications of your investments should be made in connection with your independent tax or legal advisor.
Have you ever wondered why the rich get richer and others don't? Could it be that a small percentage of the population seek out others to find, study, and execute on legal loopholes that exist within our financial life and make it easier for them to prosper? The answer is a resounding yes. This is the Secrets of the Wealthy podcast with John Mintz. John has spent a lifetime researching and mastering the financial loopholes that he believes should be available to everyone. Join us as we explore different strategies that help you get farther faster towards building and enjoying a prosperous retirement.
Hello and welcome to Secrets of the Wealthy with John Mintz. John, how are you?
Never better. How about you, Eric?
I'm doing fantastic. I'm so excited. You have a guest on the show today.
Yeah, you know what? People get bored of just hearing to me, so I've been trying to, juice it up a little bit.
All right, well, that sounds good. We got a chance to talk before we hit the record button. I know this gentleman is highly educated, and you guys have a good connection. Why'd you bring him on the show, and what are you talking about?
Well, so we're talking. I get questions from my clients, friends, family all the time about, hey, John, these our property values have been increasing a lot lately, and I'm really worried that that's going to have a trickle-down effect to my property taxes. And what can I do about that? Or is there anything I can do about that? So I said, well, I know a little bit about it. So how about we just bring on the expert and let him tell us what we should do about it?
All right. That's great. Who'd you bring?
Well, I've got a gentleman by the name of Francis Kafor, and he works. He's one of the top guys at a company that I've been doing with. I don't know, Francis might be able to tell you better than me, but I think I've been working with them now going on 10 years. And they have represented me every single year in terms of my own home and my own property taxes. And I've been so impressed with them. I just thought, well, who better to bring on than somebody I already do business with?
Fantastic. Francis, thanks for being here. I look forward to learning more about you and your company.
Absolutely. Thank you very much for having me.
Well, hello, Francis. Hey, good afternoon. How are you today, my friend?
Hey, John. How you doing? Doing well. Thank you.
Well, it's good to hear. Okay. If I could somehow figure out a way to speak like you did, I'd probably multiply my client base tenfold.
Oh, man.
Love that accent.
Thank you.
Tell me a little bit about that accent. What is that accent?
Oh, man. So, I grew up in two countries. I was born in the UK. Then my family moved to Nigeria, where I spent my teenage years. Then I moved back to the UK. Then came here as a student back in the mid-90s. I've lived in Texas since then. So yeah, I'm a Texan now. So yeah,
hey. Yeah. We're, everybody else says they're Americans. We say we're Texans, right? So tell me a little bit about your company and what it is that you guys do. Introduce yourself, your business, all that kind of stuff for us, please.
Yeah, sure. Absolutely. Again, my name is Francis Kafor. I'm with Texas Tax Protest. And my role with Texas Tax Protest is I'm the commercial specialist there. I also handle our residential properties as well, but bulk of my job is more of commercial. So Texas Tax Protest is a boutique property tax firm. It's a full service property tax firm. We handle residential, commercial, and business personal properties, tax appeals. We do we prepare evaluation. We protest on behalf of property owners throughout Texas, and we cover all the counties in Texas. So, and we've been around for about 10 years now. So, yeah.
Awesome. So you've been, I must have caught you guys right when you started, because that's about how I think maybe a little less than that, but I've been with you since the beginning. Well,
All right.
how about that?
Nice. Yeah. You're
Maybe,
definitely a loyal customer then, a loyal
maybe,
client, if I may say correctly. Yeah.
yeah, that makes me think I should get a coffee cake for Christmas from you guys. Well,
Yes.
well, let me ask you this, because I'm always curious about how someone finds the career that they are in. What was the tipping point that got you into this company and what it is that you do? Tell us a little bit about that.
Yeah, so I actually, for me, I started my career as an appraiser, a real property appraiser, doing what they call fee appraisal. So the fee appraiser typically, for the most part, will appraise for the lender for mortgage purposes. So I did that for a short period. Then I joined the county appraisal district, where I was hired as a residential appraiser. And over the time working there, also had the opportunity to work as a commercial appraiser. So I spent over about 10.5 years there working both commercial and residential. When I left the county appraisal district, I joined a private firm as a tax consultant, and ever since I've been on the other side of the tax business, if you like. So altogether, about 22 years in the industry, if you like.
Wow. Okay. And how would you explain? And this one's kind of a hard one, right? But how would you explain, the business philosophy that you guys have?
So our business philosophy is very simple and straightforward. The primary purpose of what we do is to save tax dollars for our clients. So if you're a property owner and we happen to have you as a client, we make sure that your property, one, is fairly appraised, and we make sure that the county, most importantly, have the correct information. So part of what we do, in a nutshell, is we audit the information the county has to make sure they have the right square footage, the right lot size, and things of that nature. And we basically prepare a valuation report to make sure that you're fairly assessed for tax purposes.
Well, and so what is that? How does that process work? How long does it take? Does the client have to do anything, or do you do it all for them? I don't want to ask you too many questions at one time, but a lot going on there.
Yeah. So the first step for any client is to reach out to us, or we reach out to them. A typical client is a property owner that lives in Texas, and the properties in Texas, whether it will be commercial or residential or business personal property. So we engage the property owner. Once the agreement is signed, we take it from there. So the property owner does not need to do anything. We handle everything from beginning to end. We handle the protest, the appeals. We travel to the county appraisal district. We do the informal hearing. We do the formal hearing. And, if they're not satisfied with the appraisal review board decision, they have the opportunity to escalate it. And we also assist in that part as well.
Okay. And would you say there's any risk involved in protesting your property tax?
Absolutely not. I can't think of any risk. There's it's 100% zero. There's zero risk. So it used to be before, let's say you purchased your property. I'm just giving you an example now. Let's say you paid $500,000 for your property, and the county appraisal district has it for less than the purchase price, and you file a protest and go in front of the appraisal review board. they have the jurisdiction to raise the value to the purchase price in that case. But it rarely happens, but they could. But a couple of years ago, they stopped doing that. So there's absolutely no risk. There's only tons of advantages to filing your protest. And besides making sure that your property is well assessed, the likelihood of getting tax savings is there to make sure that your property is well audited. There's no discrepancy in size or other features that contribute to value. For instance, I've seen situations where the county appraisal district had the square footage wrong, and obviously that affected the value that they put on the property. So to answer your question anyway, there's zero risk.
Yeah, and what's interesting is every now and then I'll get a question from a client. They'll say, well, because they're worried about property taxes, and I'll say, well, have you disputed it? have you had somebody to appeal that for you? And they're saying, no, I don't want to do that, because if I get my, if I keep now this is I actually get told this, if I keep my property taxes, or I get my property tax valuation lowered, and then I go to sell my house, I'm not going to be able to sell it for more. So I asked a realtor if that was the case. And she said, John, it's the opposite, actually, because first of all, a house is worth what it's worth and what somebody's going to pay for. It doesn't matter what the tax roll says. But she said, buyers will find it more attractive, obviously, if they have a lower tax evaluation, because it's going to keep their taxes and their payment down, right? And so I just thought that was a really interesting discussion with the realtor. So that just reinforces what you just said. There's no risk.
Yes, John, you're absolutely right on that. So if, say, property A is on the market and is overassessed, and property B is very comparable to property A, and it's listed for the same price, why will I buy property A and pay that taxes? Right? I'd rather buy property B. So it's always good to have your property well assessed and keep the values where it's supposed to be. Right. Yeah.
And I didn't plan on asking this question, but it just popped in my head, like often happens. If property values pull back in the next year, I'm just going to be a doomsdayer and say 20%. Okay. And so is that going to have an effect on these property valuations? And if so, how so?
So you're saying if there's an increase in value, if there's a 20% increase in value for next year, for instance?
No, decrease.
Decrease in value.
Decrease,
okay.
Yeah.
And how would that affect people's the average owner's tax burden? Well, yeah. So first off, the primary function of the central appraisal district or the county appraisal district is to assess at market value. So the state of Texas assesses or mandates the county appraisal district to appraise as of January 1. So the assessment date is January 1. So come January 1, they look at their data, and let's say on average, there's a 20% drop in values from last year. Their job is to reflect the market, and you will see lower values compared to last year, right? So the effect of that is two things can happen. Property owners might be reluctant to protest because they will say, hey, they've lowered my value anyways from last year. Hey, that's already a win. Why should I go through the trouble protesting? Right. They've already saved me some tax money, right? On the flip side, a prudent property owner will still file a protest, and this is the reason why. They will still file a protest because property values are highly localized, right? So my value, my house in my neighborhood might have dropped 35%, right? Compared to, say, the average in the metroplex, right? Yeah. So just because on average property values have dropped 20% does not necessarily mean that my value could not be lowered a bit more than what the appraisal district has it as of January 1 of 2023. So a prudent property owner should always should always protest their property values regardless. And there's absolutely no risk. There's absolutely nothing to lose with the process. So I will, if that were to happen, I will strongly encourage property. And this is what I tell property owners when they ask that question. It's a very common question. Hey, file your protest regardless. Even if your property value doesn't change, if your property value drops, still file it, because my job as a property tax consultant is to look at the market, look at the data, assess the information the county appraisal district has, and compare that information to my data. And if there's an opportunity for reduction, obviously we'll fight to nail to make sure that they pay their fair taxes.
Yeah. And the way I found you guys is a year or two after I bought my property in 2012. That was kind of the bottom or close to the bottom of the last fall. And so I got a really steep increase one year. And so I got on the internet, started looking for ways to protest, and found several different companies, and I got attached to you guys because some of the companies want to charge a percentage or a large amount, whether they were successful in protesting me or not. Whereas you guys do it on, I would call it contingency, where you don't charge me other than a really small few dollars, for the application process. You don't charge me at all unless you're successful. And that's accurate, correct?
Definitely. Now, you're so right. Some agencies have different fee structures. Some will charge a flat fee upfront. Some will charge or structure it based on a contingency fee, like you mentioned. So we primarily, for the most part, do contingency, and we believe that it should be a win-win situation. How will you feel, for instance, John, with your house? You're trying to save tax dollars, and you pay this flat fee, and they come up at the end of the season and tell you, "Oh, sorry, we couldn't reduce it." Now, I'm not saying that can't happen. It could happen where we send in all the information and we're still not successful. But the thing is, with that arrangement, John, you're already in the hole because you're still obligated to pay. So we look at it differently. So we feel that the contingency fee makes more sense.
Yeah, and I like it because it tells in my mind, it keeps you motivated because if you're going to work really hard, because the bigger the discount that you provide, the more you're going to make. Like you said, win-win. I love it. So back to your original point is there's just no risk involved here. So why wouldn't you do it every year? I agree. Well, so who would you say is your ideal client, Francis? I mean, is your ideal client just basically anybody that's a homeowner in Texas, or is there kind of a minimum or a maximum level where you don't have success, or how would you explain that?
Yes, so that's a very interesting question. But the ideal client really is anybody that owns real property in Texas. It could be raw land, it could be developable urban land, it could be improved property, it could be a commercial real estate, it could be residential, it could be business assets. So yeah, anybody that owns real property or business personal property will be an ideal client.
Okay, and that's good because I talk to a lot of folks that own a lot of different types of properties, and I don't know why, but I've never thought that they should be protesting all of those. In fact, the protest on those business properties is probably equally, if not more, important because of just the sheer size of it, right?
Yeah, with business personal property, the BPP, it's always good to, first of all, there's a compliance part of it where you have to render every year, file a rendition rather every year with the Central Appraisal District, basically declaring your fixed assets, right? And say you own a factory and you have some machinery and some heavy equipment, or you have an office space and you have computers, desk, furnitures, and things of that nature, and you fail to file your rendition, there's an automatic 10% penalty for not doing that. So, so that is part of what we do. We do the compliance part of it, and also we appeal the value if we feel the value is high. So, with business personal property, I don't want to go too far into it, but the big issue with business personal property from the county appraisal district side is discovery. So a lot of times they don't have the manpower or the personnel or the capacity to do this full discovery of, can you imagine knocking on doors and going into offices and things of that nature? So they try to estimate for a typical law office, what will a typical law office have, or what will a typical accounting office have, depending on the size or number of employees there. So they may estimate 25 computers and 20 desks and things of that nature. So we audit the Central Appraisal District's list of assets and compare it to what's actually there. So you'll be surprised what is listed in the Central Appraisal District's file. Things that the property owner doesn't even have, or they've done away with it, or they've sold it, or they don't just have it anymore. So with business personal property, again, just like real property, we highly encourage owners of business assets to always, one, file their rendition, which we handle, and in some cases, where they still believe that the value is high, we represent them in the appeals process.
Goodness gracious, I had no clue. So are you talking about desk, and I didn't mention pencils, but all kinds of things there. But what is the rendition? You mentioned that a couple of times. What's a rendition?
So, by law, you're required to declare your assets. So that's what it is. If you have, say, an office, and you have, desks, 10 chairs, 20 computers, you're supposed to have an asset list and send it in to the Central Appraisal District. Now, some CPAs, say for instance, you use a CPA to do your business tax. Your business tax. Some CPAs will have your asset list for IRS depreciation. So it's the same list, really. Okay. But the Central Appraisal, the big difference is the Central Appraisal District's depreciation schedule is very different from that of the IRS. So, but it's always good to have that in mind. But by law, every business personal property owner is required to file a rendition every single year, and if they don't, they automatically get that 10% hit on their taxes.
Wow! And so it's a rendition is almost like an inventory, if you will.
Yeah, that's exactly what it is. You're declaring your fixed assets.
Okay, that's helpful. All right. Wow, a lot of great information there. So I'm really glad we got that on this show. Well, so what's when it's property tax season, and we had to wait for you guys because I think you were a little more busy than even normal this year. Is that correct?
Oh yes, yeah. This year, obviously, if you're paying, obviously, you pay attention to the news. There's this huge increase in property values from last year. 2021 was completely unprecedented. So yeah, the amount of protests that we filed, exceeded any record.
Oh, wow.
And I'm pretty sure that applies to the Central Appraisal District. They were quite busy, they had, limited staff. So we are still in the process as we speak. So yeah, this year has been completely very different from previous years.
Yeah, that was my understanding. So we want to be patient, let you get through that busy season, but we appreciate you coming on now. And there'll be folks that'll go back and listen to this during the next property tax season as well. But during the hot season, I'm telling you, or the property tax season, I'm telling you that I get no less than 10 to 15 things in my mail or on my door about, why I should be going with them as far as protesting my property taxes, right? And so, of course, I already have a relationship with you guys, so I use you. But what is it that sets you apart or makes you different than all these other, Tom, Dick, and Harrys out there that are doing this?
Yes, so that's a very interesting question. What sets us apart? Just knowledge of the whole process. The value we bring to our clients, paying attention to detail, very experienced property tax consultants. So to me, if you're a property owner, you're going to get all sorts of solicitations around that period. And I'm not going to sit here and tell you that our fee is the lowest or the highest, right? But we are very competitive. Our contingency fee is very competitive. But to answer your question, what sets us apart is our attention to detail. We provide education to the property owner. We answer their questions. We have superior customer service. There's no way or no time you'll call, you wouldn't get anybody on the phone to answer your questions. So we have very experienced tax consultant, like I mentioned. So when you put that all together, it just creates a value that distincts us from the rest.
Well, I tell you that I tell you why I do it, and it's why I do a lot of things that I do, and why I hire a lot of people that I hire is because I'm kind of busy. So, and so, I mean, how much time, if I were to do this on my own, and I don't, but if I was to try, let's use the word try, if I was to try to do this on my own, how much time would I spend on, with my lack of knowledge, not your knowledge, but how much time would it take me to try to do this on my own, whether I'd be successful or not?
So, yeah, I mean, it could vary depending on your knowledge, right?
Which is zero.
So, but for a typical property owner, you don't have access to data. You have to reach out to the Central Appraisal District to determine or find out how or what they use to determine your value. That's one step. And again, it could take days or even weeks before they reach out to you. And everything is on a schedule. So, you want to start early if you're to handle it yourself. But I mean, it's time consuming. Sometimes you have to travel to your office and sit there. You could possibly sit there for hours before somebody attends to you. So, so obviously what we do saves time, not just tax dollars. We save our clients a lot of time. You can imagine the travel time, sitting in the waiting room, sitting there in the lobby, waiting for somebody to sign them in. And again, going in there yourself, you may or may not have everything that you need. So you may end up going back there again, so situations where I know some property owners that tried to do it themselves had to, go there more than once, because the first time they went there, they went there empty-handed. No, you have to bring, if you're saying that your property is worth X, you have to find supporting documentations, right? So let's say, let me just throw out an example. Let's say you purchase your property for $500,000 and it wasn't disclosed in the multiple listing service, but you have a closing statement and it was an arm's length transaction. Chances are that, they will come close to the purchase price, or if not purchase price. But let's say you went in there, right? You traveled from your location to the office and sat there for an hour, and finally talked to this appraiser, and you tell the appraiser, oh, I purchased this property just last year for $500,000. The question he's going to ask you is, or the question she's going to ask you is, where is the closing statement? Where is the purchase? The closing statement, where's the contract, right? That says that you paid $500,000 for it and you don't have it. So you may end up coming back there again with that information. So this is what we do, and this is how we save our clients just time, a lot of time, and obviously tax money.
Well, you're never going to lose me as a client, because I can tell you, I am the least patient guy on the planet. I had a boss one time. He just called me Mince. He wouldn't call me by my first name. It's my 20s. And he'd say, Mince, you're so patient. If you were a watermelon farmer, you'd dig up the seeds and eat them. And so I'm not really patient. I could not sit somewhere an hour, much less 3 hours waiting on somebody.
Oh, man.
So anyway, okay. Well, listen, this is awesome information. Let's try to wrap this up. But tell me, if you had to give any sort of passing wisdom to our audience, and our audience is really great, and we put this show together, Francis, called The Secrets of the Wealthy, for that reason. We don't want these simple truths like this to remain secrets anymore, because they shouldn't be secrets, right? Everybody should have access to this and know about this simple step to keeping their valuations down, which keeps their taxes down, right? And so if you had to pass on some wisdom, and I'm asked this question in the past to some guests on our show, and sometimes they give us their business wisdom, and sometimes they just give us, Confucius wisdom. But either way, it's great. But what kind of wisdom would you pass on to our audience today?
Yeah, so understanding the process is very important. And if you go to our website, there's www.texastaxprocess.com. There's frequently asked questions and answers there. There's a video on the appeals process, a very informative website. But in a nutshell, it's just to understand the process. You have the option to hire somebody like me to handle it. And like I mentioned, all you need to do is to engage us, and once the agreement is signed, we handle the rest. Property tax, if you say on a commercial real estate, say let's say on an apartment or an office building, if you look at your expenses, insurance, utilities, repairs, property tax expense stands out. It's a huge expense item. So it's always good to have this line item under control. Even if you're a homeowner, you don't want to overpay or pay higher than your fair share of taxes, right? So it's always good to make sure that your property is fairly assessed and you're paying your own share of your taxes. So whether you're a real commercial property owner, or whether you own a house or a business personal property, it's always good to file every year and make sure you're in tune to the process and know exactly what to expect. So yeah.
Awesome. Well, Eric, before we close this out, do you have any questions for Francis at all? Man, it's been a great show so far.
It has been a fantastic show. I don't have any questions for Francis, but I had some flashbacks going on when he was talking about going to the office and having to sit there. Any of us that have experienced DMV, having to stay, and then get your number called 17 hours later, and you haven't eaten lunch, and it's just frustrating. That alone, to me, is worth the price of admission in this situation. So, Francis, I just thank you so much for your time. If folks want to check you guys out, what's the best way to find you?
So you can obviously go to our website, is www.texastaxprocess.com. There's a contact number there. So you can email us. You can give us a phone call. You can also text. There's a texting capability there. You can send a text message as well. And also there's a form to fill out, a contact form. So there's several ways to reach out to us. And the appeal season typically starts in April. We start our signups around that time. So that will be an ideal time for next season for somebody who wants to file the protest to reach out to us.
All right. Fantastic. We'll put a link to the website in the show notes. John, you do this. Again, you don't want anybody to have to pay more than their fair share. All these podcasts that you do are educational, and you're bringing something new to the audience every time. Well, if there's somebody that's new in our audience, maybe they just need to reach out to you, review some of the podcasts, but reach out to you to talk about their overall plan. How do they get a hold of you?
Well, yeah, and so hey, we've accomplished revealing one more secret of the wealthy. So that's awesome. But yeah, our direct phone number is to our main office is 817-225-6260. We encourage people to call there because we actually do answer our phones, and we have amazing staff there, and we can help folks in whatever way that they need. And listen, I would just recap this by saying, I've used these guys for a long, long time. And whether you know a little or you know a lot or you know nothing, I encourage you to let these guys fight for you because they're good at it. And the process is super easy and you got nothing to lose. And in Francis' words, there is no risk. Right. And so
absolutely.
Yes. All right. So it's been a great show. And Eric, you want to wrap us up? That's been awesome. Thank you, Francis.
Absolutely. Francis, again, I'm just going to echo what he said. Thank you so much for being here. John, of course, we wouldn't be here without you facilitating this show. Thank you so much for hosting. And of course, our last thank you goes to you, listening audience. Thank you so much for tuning in and listening to the Secrets of the Wealthy podcast with John Mintz. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when John comes out with a new podcast, it'll show up directly on your listening device. This also makes it really easy to share these podcasts with your friends and family. Again, thank you so much for listening today. For everyone at the Secrets of the Wealthy, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Secrets of the Wealthy podcast with John Mintz. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of John Mintz. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.